Good morning, everyone. Welcome to this webinar on the future of carbon footprinting. I assume you can all hear my voice and you can see the screen. If not, then I ask Marie to quickly inform me over the chat. It's great for me to see that so many people were interested in this webinar and made some time today to join this webinar. So thank you for that. And I think it's another proof point that carbon footprinting becomes increasingly important in the business world. So for those who don't know me yet, I'm Kenneth van den Berg, co-founder of Carbon+Alt+Delete. And at Carbon+Alt+Delete, we develop software to track and reduce the carbon footprint of companies. And my personal background is a technical background. I'm an engineer by education, with more than 10 years of experience in the energy and sustainability sector, first in academia, but then also as a management consulting. I spent some time working for the Boston Consulting Group. And now about 2 years ago, together with Hans-Peter, my fellow co-founder, we started Carbon+Alt+Delete. So let me still add some other people who are waiting in the lobby. So before getting started, maybe some housekeeping rules. So you're all muted by default and your camera is switched off by default. This webinar is being recorded and will be shared with people who were interested but couldn't be here today. Normally you have access to the chat, so I would invite you to leave comments, questions in the chat throughout the webinar. And we have foreseen 20 minutes at the end of the webinar for a Q&A. So there I will allow you to unmute yourself and ask your questions, but feel free to, in the meantime, already put them in the chat and I'll try to address them when relevant. Or if I miss them, don't take it personally, then we do it during the Q&A at the end of this webinar. So there are still people joining, so once in a while I'll pause for a couple of seconds and let them in as well. So what is on the agenda for today? So we would like to talk about two topics. One is things that we see happening today in the carbon footprint market. And I will define carbon footprint market in a minute. And then second, give a testimonial of what it means for us all here in the call, from the perspective of a company, an enterprise. And we have Elisabeth Joos in the call from Group Joos, who will share their experience with carbon footprinting. And I will also say a couple of words on what we exactly do at Carbon+Alt+Delete and our positioning in this carbon footprint market. And as said, the final 20 minutes of this webinar are dedicated to Q&A. So without further ado, what is the carbon footprint market and what do we see happening in that market today? So carbon footprint market, we also sometimes call it carbon accounting market. It's basically the market for all services and products related to measuring and supporting companies in reducing their carbon footprint. So it's the full market of people calculating carbon footprints and giving advice or ideas on how to reduce it. So it's excluding really the offsetting market. It's also excluding all investments that companies do to actually reduce their carbon footprint. So it's really about measuring and identifying pathways to climate neutrality. And it's an internal estimate. We estimate this market to be around 4 billion per year by 2025 in Europe. So we focus on Europe, and we did some back of the envelope calculations about that. We divided it over the type of companies in terms of size of companies. And I will, by the way, these are the slides with the most numbers on it. So it's a good start of this webinar. But basically the rationale that we follow is, one, you see how many companies are there depending on the size of the company, which is basically the first column. And then the second question is, how many of these companies will actually measure and track and reduce their carbon footprint? And for the very large enterprises and the large enterprises, it's rather easy because it will be all of them. They will be forced to do so under the Corporate Sustainability Reporting Directive, which will come into force as of 2024. Medium enterprises, there it's a bit less clear how many will really track and reduce their carbon footprint. But what we see happening today is that a lot of large enterprises or very large enterprises start asking medium enterprises to also disclose their carbon footprint. So also the group of medium enterprises, so above the SME segment, will need to start disclosing their carbon footprint. Sorry, the larger part of the SME segment. If you go to smaller enterprises and micro enterprises, you see there are a lot of these type of companies, but there it's really unclear how many will really start disclosing in a professional way and what is their willingness to pay to do so. But if you look at this figure, you see that there is a lot of value, a lot of market size with the medium and the large enterprises. And these companies are typically today not well prepared to start a journey towards climate neutrality. But that's where a large chunk of the market will be over the coming years. So that's in terms of size. In terms of dynamics, we like to say that carbon accounting is in the midst of a triple tipping point. And we also like to compare it with dominoes. And there are three dominoes. The first dominoes are enterprises, companies that want to track and reduce their carbon footprint. And basically that domino has fallen or is fallen, but has almost fallen. The second group are consultants, people, experts supporting these enterprises in their journey to climate neutrality. And this domino is fallen. And the final part are software providers, companies like us developing software to automate and make sure that the full carbon accounting process happens in an efficient and a correct way. You see that that domino is shaking, but still needs to fall. So let me go through them one by one. And I see a question of someone. Yes, the slides will also be distributed after the webinar, so you don't need to take print screens. You will get access to the slides. But what's happening with the enterprises? It's clear that in terms of enterprises disclosing their carbon footprint, we've reached a tipping point. The figure that we show here is a figure of the Carbon Disclosure Project, and they report every year the increase in number of companies that disclose their carbon footprint through CDP. And you see that has been steadily around 10% increase every year, but then in 2019, it increased to 20% increase. 2020 was the COVID year, of course, so slight drop. But then in 2021, still in the midst of a COVID pandemic, it jumped to a 40% increase of companies disclosing their carbon footprint on a voluntary basis. It's voluntary to CDP. And of course, it's only one data point, but I'm sure that most of you here in the call, if they look around, they see that more and more enterprises start disclosing their carbon footprint, start setting climate targets, start developing a climate strategy to become climate neutral in the coming 10, 20, 30 years. Now, these enterprises, they typically cannot do it on themselves. They need support from experienced peoples, and these people are the consultants. So that's the second domino. It's about the consulting market. And this market is, as we speak, very much in motion. And as a proof point, I just took some headlines of newspapers or news websites over the last couple of months. And you see that on the one hand, these consultants, they get a lot of business from enterprises that needs to start addressing their carbon footprint, which is very good news for them. But on the other hand, they're also active in a very competitive environment. Competitive in two terms, or three terms actually. One, you see consolidation in the sector, where large consultancy firms acquire smaller, typically dedicated sustainability consultants. Recently, Accenture acquired Greenfish. You have South Pole Ceatologic merger acquisition. Climate Neutral Group is a Dutch-based sustainability consultancy acquired by Entasis recently. So that's one trend that you see there, consolidation. A second trend is about new competitors entering the market of sustainability consultancy, also offering carbon accounting. And one example there are the big four players. Deloitte, PwC, EY, KPMG. They are entering the market of sustainability services, and they're doing so with full financial power. So you see Deloitte, for instance, announced to invest 1 billion globally in its sustainability and climate practice. So next to consolidation, you see new parties entering the market. And third is about the fight for talent, the war for talent. You see that a lot of companies, a lot of consultants are looking for the right people to support companies in their trajectory towards climate neutrality. And for instance, the quote that I show here at the bottom is of BCG CEO Christoph Schweizer, who gave an interview to the Financial Times and basically said, hey, if you are 20, 30 years old and you consider yourself a climate activist, join us as a big consultancy, because we make sure that our clients, large enterprises, become or will reduce their climate impact. So you see that as a sustainability consultant, you're in the same war for talent as these large management consultancy firms. So a lot of things are going on in the consulting market. When it comes to tooling, to software, basically today, the market of carbon accounting, it's still an Excel world. These type of calculations happen for the majority of the cases in Excel. And I think everyone in the sector knows that this is not a long-term solution. And in particular, not for two reasons. And one, you see that a lot of new regulation is coming, new rules on how to report on your carbon footprint, which framework to use. Probably emission factors will become more detailed and more stringent as well. So there's a continuous effort to make sure that carbon footprint calculations are being or staying compliant. And we call it compliancy as a service, which is very labor intensive to do if you do it just for your own consultancy firm. So there you need software providers that have the scale to do it for a lot of different companies. Second, and that's personally for me really a game changer, will be the impact of the corporate sustainability reporting directive. And so it's the second time that I mentioned the directive. For those who are not yet familiar with it, it's a European directive that will make it mandatory for companies larger than SMEs, so company with more than 250 FTEs, 40 million turnover or 20 million balance sheet total. For these companies, they will be or need to report on their non-financials. Non-financials also including their carbon footprint. The details are still being worked out, but this directive will come into practice as of 2024 for the year 2023. So these companies will need to do a first sustainability reporting in the year 2024 with data for the year 2023. And why is it so important? In this directive, they mention one, limited assurance, and two, a digital format in which you need to submit your sustainability reporting. So you see that there's a trend to digitalization, that there is a trend to increased scrutiny, assurance, third-party auditability, and these kind of processes can be facilitated way more easy with a professional software platform rather than with standalone Excel files loosely linked without version control and so on. So these are the three dynamics that we see in the market, and they result in four trends. And basically, there is a general trend to make carbon footprint a commodity, that it's becoming as widely available, as cheap as a commodity. And the four underlying trends to make carbon footprint a commodity is one is about workload, where there is a huge need to increase the efficiency of the carbon footprinting processes, in particular in collecting the data, but also in making sure that all people needing to collaborate on the carbon footprint, both in the company and outside the company, come together in a centrally managed platform to make sure that everyone can input his or her data. A second attention point or trend is that you see in terms of resources Today, a lot of highly educated profiles, typically masters in engineering, are doing carbon footprinting, including the more dummy, quote unquote, data collection process, which of course makes it very expensive to do the carbon footprint, but also makes it more difficult for the people doing carbon footprint to find the right resources, because they're all fighting the same war for talent. So there is a clear trend or a logical trend that lower educated profiles, professional bachelors, for instance, will do the operational part of the carbon footprint, so that the highly educated masters in engineering, for instance, can focus really on the complex, specific advice to companies. And that will overall result in a lower price for carbon footprinting for companies. A third one is on correctness. I already mentioned it before. It's about compliancy as a service. So as said, a lot of new regulations in the pipeline. It's a continuous effort to make sure that carbon footprint calculations are compliant with the latest frameworks, the latest standards, and are being able to being audited. A fourth one is actually the most important one, is on impact. Measuring a carbon footprint is important, but it's not a goal in itself. It's a means towards an end. And the end is reducing the carbon footprint of enterprises in the most cost-efficient and efficient way. And in order to do so, there is a lot of value still to be captured by translating the granular data that is being collected for carbon footprint in actionable data-based insights. And I will give a couple of examples later on how we as Carbon+Alt+Delete look at these four trends. But that brings me to basically a question for you. I also want to take the opportunity to use the expertise of all the people here in the call. And the question that I basically have for you, with all the dynamics and trends that I've been describing, according to you, which business model will prevail in the carbon accounting market? And the carbon accounting market is a rather new market, but the business model that will prevail will probably not be a completely new business model. It will be a business model similar to an existing sector. And I list some examples here. The first one is the financial sector model, where you've companies that need not consultants, but accountants, and these accountants use software. And for the people here working for a company, I'm pretty sure that you not always know which software that your accountant is using, but you take it for granted that your accountant is using a professional software to manage your financial statements. So that's the financial sector model. Enterprises talk to consultants, consultants talk to software. The HR sector model, let's take SD-Works as an example there, for payroll management. Enterprises use software of SD-Works to manage their payroll and to manage their employee base. When they have specific questions which are a bit more complex on specific HR regulation or so on, they call a consultant of SD-Works and they pay them on top of the software use. And of course, the consultant can then also use the software, look up the right data and so on. So there it's more not a straight line, but a triangle of the three parties. And in the consulting sector model, it's more the classical consulting sector model where companies use software to manage certain processes, for instance, their supply chain, and then consultants come in to optimize, for instance, the supply chain of companies. Of course, they use the software and the information in the software, but they're not directly using the software themselves. It always goes through the enterprise. And then probably you can also think of some other business models, but the question is, what will be the winning business model in carbon accounting? So I will now launch a poll. So you will normally see a pop-up on your screen where you can pick the winning model for you. So let me quickly recap while the answers will come in. In the financial sector model, enterprises will use sustainability consultants, and these sustainability consultants will use software. In the HR sector model, companies will manage their own carbon footprint directly in software and give a call to consultants once in a while. In the consulting sector model, you will have, again, companies fully managing their own carbon footprints and very ad hoc call a consultant, but this consultant is not linked to the software in any case. So I'll leave the poll open for a couple of more seconds, and then let me close it. So I think you can see the result as well on your screen. So there's kind of a split between the HR sector model and the consulting sector model. So there is clearly a strong belief that companies themselves will interact in the software. It's very interesting because personally, I believe more in the financial sector model. So I'm more with the 10% that voted for that. We can have a discussion around that in the Q&A. And then the other 8%, feel free to always specify it in the chat what you see then as an other business model. Very good. Thanks a lot. Thanks a lot for your input. I see still some comments in the question, some comments in the chat, but I will take it up during the Q&A if that's okay. So that brings us to the second part. These are the trends that we see in the carbon footprint market. But what does that mean for companies? What does that mean for software providers? What does that mean for consultants? So now I would like to give the floor to Elisabeth. Elisabeth, normally you can unmute yourself and maybe switch on your camera and say a couple of words on what you do with Groupio's.
Hi, good morning. I hope you can hear me all.
Yes, that works.
So I'm Elisabeth. I'm from Groupio's, and we are a communication production company. So we print on paper. We were founded in 1935. My great-grandfather founded the company. So I'm fourth generation now in printing business still. Why I put this on the slides that we burned down in 91. Our company burned down to the ground, and my grandfather already had the idea to build a more sustainable company, a more future company. But this wasn't possible because of insurance reasons. We had to start up sooner than we would have liked. But since then, sustainability has always been part of our strategy. Being in the paper industry, it's difficult to have an image that says sustainability because everyone nowadays is going digital because that would be more sustainable. Printing is still seen as a polluting factor, but we work very hard on this image. So now being in the fourth generation, sustainability is on top of the agenda, but it's not for us not a separate part of the strategy. It's always been embedded in our strategy. So we were looking for, we have always done a lot of things around sustainability. We always had to explain why paper was still relevant in the cycle of communication. But 2 years ago, when I entered the company, I wanted to do this in a more professional way. We noticed that a lot of tenders, public tenders that we entered in, asked for a more professional way to go about sustainability. They asked us what we do. They asked us how we see ourselves in the future going about this. So we started looking for ways to take this on in a more professional way. One of them was carbon footprinting. So we did scope 1 and 2 already. We have been measuring this for a while now already. We've been ISO certified with 27001. But now we would like to take it a step further. So carbon footprinting became more of an important way to go about this. And scope 3 was something that we weren't doing already. And being an SME of 120 people, we don't have the resources to hire specific people to investigate all of this. So we needed, or we were going to look for a way to easily measure our carbon footprint entirely, so scope 1, 2, and 3. And that's when we were looking for software to measure this. For us, for SME companies, looking at something that's easy, takes not a lot of time, doesn't need too many resources or specific capabilities from specific people. So we found a software with Carbon+Alt+Delete. And for us, it was important that it was easy to go about, so easy to fill out, looked easy, didn't take too much time because we don't have too much time to go about this. And we noticed that this was a tool to use, so we were actually really happy to start using this. But we still needed a little consulting because we don't have the resources in-house to do this. And what we do, we attract external people to help us with the initial measurements of the carbon footprint. And now, after the initial measurements, people helping us, explaining us how to do this, we now feel confident to keep doing this ourselves with the limited time we have, limited resources we have. We still manage to, in an easy way, use this software and use it ourselves. And now we just use from time to time specific consultants to just help us ad hoc. So I answered the question before. We use ad hoc consultancy to help us for specific questions to go about this. So for us now, it's more easy to go to Strategy 2030, where we where one of the pillars is to be or to strive for carbon neutrality by 2030. So for us now, it's more easy to envision this, to achieve our goal, to help us achieve our goal. So this has been a great tool.
Thank you, Elisabeth, for sharing your experience. I get an echo, so maybe if you mute, can you remute yourself, Elisabeth? Thanks a lot. And maybe adding on that, based on indeed what we have seen in Group Yoos, but also in other companies we work with, is that typically there are three difficult things. One is setting the boundaries. What do you need to take into account in your carbon footprint, what not? How far do you go in scope 3 and so on? Second, when the data collection is happening, you sometimes need kind of a cutoff. Okay, this is where we stop and we work with that level of detail, in particular in scope 3, or do we go further and do we start really asking our suppliers to deliver all data? And that's kind of a balance exercise that the more experience you have with it, the easier it is. And a third aspect where companies, we believe, really need support is in understanding what is 1 ton of carbon emissions, right? I think we all have kind of a feel with what €1 million is, whether it's a lot or not. Whether 1 ton, 100 or 1,000 ton of carbon emissions is a lot, there is really a learning curve needed in companies, not always with sustainability managers, but definitely with broader teams in companies, to get a bit feeling with, okay, what is a ton of carbon emissions? So I think there is a very important role to play for, let's say, sustainabilities or carbon accountants, human experts. To continue, I say a couple of words exactly on what we as Carbon+Alt+Delete do. So as said, we are really a software provider. We're not a service provider, and we're not a final enterprise. And we develop carbon accounting software to calculate the full carbon footprint, scope 1, 2, 3, of companies according to the Greenhouse Gas Protocol, and to manage the full value chain of carbon management. So both measuring, but also target setting, scenario simulation, even down to offsetting. And we play on the 4 trends that we just described. So in terms of workload, we put a lot of effort on making sure that data imports happen in an efficient way. We can link to third-party platforms from, for instance, energy suppliers, fuel card suppliers. In terms of resources, I think we see it as an important role for us as a software provider to make sure that the operational part of carbon accounting becomes easier and can be done by lower educated profiles. And it's said with all due respect, right? I think it's just different profiles than today need to do this operational part of the carbon accounting. Third, as said already before, I think compliance as a service, that's for us a task that we see with us, and we make sure that our carbon accounting software is compliant to the Greenhouse Gas Protocol, but also will be compliant to the Corporate Sustainability Reporting Directive and any other regulation or directive that might follow, just to make sure that it's not a consultant that needs to make sure that the calculation is always compliant, and it's also not the final enterprise. It is us as a software provider who does that, because we have the scale to do it for all our software users at once. And also very important here is, I think, a point that we heard from a large consultancy doing a lot of carbon footprinting. Today, their consultants are running around with an Excel file, and as it goes, it starts with one Excel file for everyone in the company, but it easily becomes every consultant his or her own Excel file. Knowing that there will be more and more auditability or audits of carbon footprint, it is a serious liability for the consultancy firm, right? If you have consultants running around with different Excel files which are not standardized, but you can be made responsible for mistakes that might happen. So there, from that perspective, there's also really a need for a fully compliant software platform. Finally, in terms of impact, again, it's about data-based insights and using the granular data that you collect on energy consumption, driven kilometers, procured materials, and so on. And there, for instance, we started a couple of months ago a research project supported by Vlaio, the Flemish agency on entrepreneurship and innovation, where together with 3 other companies, we work on benchmarking of carbon footprints. So the ambition is that we will be able to say to a certain company how they compare to their peers in terms of carbon footprint, and even more importantly, what the top performance in their peer group do differently than what they do. Because it's a typical question that you get from companies, okay, that's our carbon footprint, but is it good or bad? So this benchmarking, it's a very interesting reference point for them, but it's also a very strong trigger to action. If you say to CEOs or sustainability managers, okay, that's your carbon footprint, but you're only number 8 out of 10. And in order to be on the podium and be with the top 3 players, you need to do A, B, and C. So that's where we as a software provider want to deliver added value. And then, of course, it's always up to a consultant or a sustainability manager in the company to translate that advice to the exact context of the company at hand. Now, to give you a bit of a feeling on how the software look, we have a very short 30-second video that I will quickly like to show with you. It's running. And I will quickly say some words in voiceover, right? So our platform is cloud-based. You can log in and then you see the resulting carbon footprint of your company, where you can filter on organization, on year, or on specific activity. Then what's behind this is a carbon accounting engine compliant to the Greenhouse Gas Protocol. So it means that first you need to set the boundaries, reporting periods, organizational units, but also the activities that drive the carbon footprint, scope 1, scope 2, scope 3. And we base ourselves again on the Greenhouse Gas Protocol, right? And then in the input table, you get all granular data. For instance, here on heating of buildings, you can go very deep on the all underlying details, emission factors, split by greenhouse gas, and so on. So I know this was kind of in a rush. You've seen the mouse moving around over the screen rather quickly. So in the slides that will be shared, Where is my screen? Here we are again. In the slides that will be shared, there also will be, there also will be a video. I need to go to the next slide without starting the video. Here we are. So in the slides that I will share with you, you will also have a link to a somewhat longer video that goes a bit slower, to feel free to have a look at it. And here you also see the companies, or a subset of companies, enterprises, that manage their carbon footprint through our platform. You see it's rather diverse in terms of sectors, also rather diverse in size of companies. That brings me to the end. And I would say thanks a lot for being here. Thanks a lot for making time to join the call and to listen in. First, it was great to share our view on the carbon footprinting market. I hope that you find it interesting, and don't hesitate to reach out to us with any question, remark that you still might have. So thanks a lot. Enjoy the rest of your day, and we probably meet again or talk at another point. Thanks a lot. Have a nice day. Bye bye.